and or contact Karen and Sharon, and they can assist you with getting you, help and in touch with someone. So those would be the things that I would recommend that they do immediately.
Thank you, Angela. And Patricia.
Mm-hmm. So Angela touched on the Paycheck Protection Program, which is, there is a round 2 coming up starting on is that the 30th? On the 20th, on this coming Monday. And so if people need money, they still can apply. And even if the money is gone, they can be in line for round 3. And that program, as Angela said, is for independent contractors who receive 1099s. And it's for small businesses, the hair salons of the world, the small accounting firms, the small cigar bars. It's for businesses up to 500 employees. So just because it may be over by the time you get your things together, there may be a round 3 that comes up in another month or so. There's been some discussion about that, and I don't know exactly where that's going at this point. But everything I said earlier about businesses applies to individuals. Contacting your creditors today, if you can't pay, talking to them about late charges, talking to them about deferring payments. All the banks are deferring payments. So there's no reason not to give them a call and talk about deferring loan payments. And also, as I mentioned, about asking them not to report you to the credit bureau. All the banks are very sensitive to this. They're not taking a hard line. They're very sensitive. They want to help people and recognize that this is an extremely difficult time for all of us, including the banks, but they are very sensitive to wanting to help their customers.
Thank you so much.
Yes, well, I guess I'll jump right back in, Sharon, and I'm going to direct my question to Angela. Angela, with everything that's going on, and you work with a lot of clients that have their own businesses. So we hear now that even self-employed people can file for unemployment. So, but the concern has been, is this money I have to pay back? Is it going to be taxed? How do the unemployment work, and how do they go about applying for it? Is it as easy as just going online and pulling up the unemployment rate and making sure that you just fill it out, or do they come to you as an accountant and you help them fill out for the self-employed benefits?
So the unemployment process is a very basic process where you just Google whatever state you are in and Google unemployment, and you can submit the request online. It's a rather simple process. Your name, your address, basic information. So you shouldn't need an accountant's help to apply for unemployment. They're basically going to ask you what day you became unemployed, and you should be able to start that process. But it's going to be, again, very important that you at a minimum know what your income is for 2019. 2019 is the indicator, or the last 12 months is what is being used as the amount of time to determine your how much money you'll be receiving. So to answer your question, Karen, all they have to do is Google unemployment for the state where you worked. Excuse me, let me correct that. Not where you live, but where you worked. And then you would put in the information requested, know how much income you made in 2019, and you should be able to submit that. Your other question is, do they have to pay it back? Unemployment is not something you have to pay back, but you do have to. It is taxable income. Mm-hmm. So when you file your tax return in 2020, you are going to have to pay income tax on that. So I would highly recommend that you have the tax taken out if you can, and and you can speak with your tax professional about how much or what your tax bracket is, so that you're not having to be concerned about not having enough tax withheld when it comes time to file taxes in next year.
Great, thank you. And Patricia, I guess I just want to follow up with you on what you were saying about deferring the loans. And yes, we know that most banks and most people are working with you and deferring the loans, and also not charging the late fees. However, people are still concerned when they say deferring and putting it on the back end. Please explain that, because still people are confused about what that means on the back end. So the question is most asked, even if they deferring it on the back end for the next 3 months, because most people are doing it for the next 3 months, most lenders. Do this mean on the back end that they have to pay the last 3 all at one time, or how do that work? And what do we really mean by when you're saying you deferring it to the back end?
And lenders are doing it differently. Mm-hmm. I can just say what we're doing at Industrial Bank is we're allowing our borrowers to defer 4 months of loan payments, starting with April, starting with March, if they wanted to start at that point in time. And then after the 4 months, if they want to do it another 2 months, we'll do it another 2 months. But sometime this summer, we're going to reassess what direction we want to go with deferred loan payments. So we're not requiring, well, let me say this way. After the 4 months, they can either come back to us and ask for another 2 months, or they just start resuming their payments again. And when I say on the back end, their maturity date will still be the same, but their principal payment will be a little higher than it would have been if they had been making payments all along when they get to the maturity date. The one thing that people do need to keep in mind is when you defer payments, the interest amount is still available. So once they start to resume payments, their payments will probably go all to interest for several months until the interest is paid up, and then the payments will start being applied between a split between principal and interest.
Thank you.
So I will direct my next question to Angela, and then Patricia, I'll have a follow-up for you as well. Angela, one of the things that I've seen in working with emerging entrepreneurs mainly is the co-mingling of funds. And if you know anything about business setup, you know that is a absolute no. Can you talk to our listeners about really the reasons why, if you do have a business set up, that you should not commingle your personal funds with your business funds?
Oh my goodness, that's a very good question. And right now that we're going through this COVID stuff is exactly why you should not commingle funds. Because part of the documentation, if you don't have any documentation, is your business bank statements. So just think, if you're not commingling and you had set that business bank account up, you could use your bank statements as supporting documentation as proof of income. So commingling of funds is a no-no as it relates to Internal Revenue Services. Our firm doesn't even take commingling cases. You can't win them because it's not something you're supposed to be doing. If you are self-employed and, you know, when you first start, you don't have a lot of money. So if someone has a new idea, I always tell them, set up a DBA. It's $25, like with the state of Maryland, to do a trade name. At least you have the proper documentation to make sure that's what you want to do. And you have the ability to set up a business bank account and separate your personal funds from your actual self-employed or business funds. And that will allow you to properly track and perform record keeping for the business when it comes times for taxes or documentation. So you do not want to commingle. What does that mean? That means you have a business. You say you are you sell t-shirts. You want to deposit all income when someone's purchasing t-shirts into that business bank account. And so you got to buy supplies, you got to buy graphics, t-shirts to print your graphics on. You want to pay for your expenses out of that business bank account. You don't want to pay for it out of your personal account. And then as you start to make a profit, you want to write yourself a check from that business bank account to your personal account so that you have clear traceability and you're able to track that from a records perspective. So commingling also means you're a business. You shouldn't be swiping your business card for liquor purchases. That is a personal expense. So there's certain things you don't want to do. And most business owners, they don't know. They don't know what they don't know. Or they've gotten bad advice. So we help clients get on the road to recovery. And if you are doing that, we just will assign it as a owner's distribution, and you would just have to pay tax on anything that's personal. But, I highly recommend no commingling of funds.
Mm-hmm. And so, but let me ask you, Patricia, before you start, for an individual who comes into your bank, who already has that personal account, do you even allow a business account to be attached to that? Or is that something that you can't even do as far as the banking perspective?
To be attached to a
personal account, to have a business account and have it attached to a personal account.
No, they're two separate. They're two separate accounts, right? When you're coming to open a business account, then you need to bring the proper corporate documents, a tax ID number. Unless you're setting it up as a sole proprietorship, you should have your corporate documents and a tax ID number to open an account. Just like Angela was saying, it's two separate things. And to piggyback on what she was saying is, if you're out in wanting to borrow money against your business, that's even more reason why you need to keep your business funds separately, because the traditional way, and there's a lot of means of borrowing these days, but the traditional way is to be able to ascertain the cash flow of the business. If you're applying for a business loan, the lender needs to understand that your business has the ability to repay the loan. And what a lot of small businesses want to do, and Angela was indicating this earlier, but what small businesses want to do is they want to not pay as little taxes as possible, so they don't show a lot of income on their tax returns, but they want to borrow as much as they can. So you can't have it both ways. So if you're trying to limit your income, and I'm not supporting this, because you want to pay limited taxes, then you can't try to convince me you make another $100,000 over what you report to the IRS. So that's why your tax returns ought to be reflective of exactly what you've earned.
Wow, Karen, I tell you, we're getting some knowledge today, right?
Yes, we are.
The knowledge, they're getting the knowledge. But guys, we are down to our first break. I tell you, just this first half already, you have helped some business owners and some entrepreneurs today. So I tell you, this is VMP, Inspiring Our Community, with Karen and Dr. Sharon. Our guests today are Patricia Mitchell and Angela Floyd. And guys, we're going to be right back, so you don't go anywhere. We'll be right back. VMP Media is currently servicing clients with podcasts, webinars, and remote live streaming needs. Email us at info@vmpmagazine.com or contact our Director of Sales, Ms. Karen McConnell Jones, at 202-904-1000. VMP, Inspiring Our Community.
Welcome back to VMP Inspiring Our Community podcast. Sharon, we are having a ball. These first set of questions just was unbelievable, the answers we've been getting. We just have two dynamic ladies that's giving us the best of both worlds today. We have the accountants on one end and the banker on the other. So now I'm going to switch gears a little bit. with that being said, you are two women in finance, and we all know that finance, the number games, as we like to call it, it's a man's world. It's a man's game. So I just want